Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son of
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. That guy over there is Fat Man Zoom. It's Stock Watch Sunday. Even though the market's closed tomorrow, we're still doing it on Sunday like always, folks. Fat Man Zoom, what's up, my man?
What's going on, brother? Back's looking good.
Working on that posture. Shout out to Ross Matthews for the friendly reminder.
But the back of our background looks good.
Oh, I thought you were talking about your back. Because you were like sitting up straight, so. But yes, no, the back looks awesome.
We're close, people. We're close.
If you guys can kind of see it a little bit, we're gonna maybe one day this week we'll get a really good close up of it. But it looks pretty awesome. We had a custom artist come in and put a mural up in the back studio, so it looks awesome. Looks great. I love it.
Shout out to our starting five. We have, of course, that happened. I can't tell you my starting five. Did it shut down?
No,
It literally just.
that's all right. I got you.
I got it.
You got it?
Yeah. Allen 316, Ross Matthews, Mavis Beacon, Ankit Gour, and Yoli Sarias.
He's a top
Starting
five.
Yeah.
Welcome. Thanks for showing up first.
So we have the day off tomorrow.
Yes,
But we're still hanging out today. Got a few people in the house. We've got a few topics that we're going to go over. And I want to talk, we'll talk about June, but I want to sort of get your perspective on the market overall.
Yeah.
And how things have seemingly settled out. And then seems like tech may be coming back a little bit, but then we also have our top five stocks. We have some decent earnings, so I think we have a good lineup of stocks, a good mix.
Yeah.
So it should be a good one. We did have, I will say, I was looking at like crypto, and crypto seems like it's like in an interesting spot. Like,
yeah.
it kind of seems like it's just trying to hang on.
You know, and it was interesting. I watched the Indy 500 today, and it was awesome.
Yeah.
And the race itself was really cool. I loved everything about it. But the Bitcoin car, did you see this?
No.
So there was a legit Bitcoin race car.
Wow.
And it led, I don't know, 15 to 20 laps
Yeah.
at the Indy 500. And that's all it was. It was just a Bitcoin car. And it was pretty crazy. Anthony Pompliano was tweeting about it once he came into it was leading the race or whatever. Didn't do shit for Bitcoin, but it was kind of cool just to see like the national exposure that it had on a pretty big stage like that.
What does that mean, Bitcoin car? Like somebody?
It was like sponsored. I guess like maybe I don't even know how it was sponsored or why it was sponsored, but like, you know, if you guys don't know anything about racing or NASCAR or the Indianapolis 500 or just Indy racing in general, or really any racing that has stickers and sponsors and everything else all over the car. The main sponsor is where you see the biggest stickers.
Yeah, that's what I'm wondering when you say Bitcoin car is like who paid for it?
I don't know. I mean, it must have been like
Or if
a community of Bitcoin investors. I don't know.
That seems desperate.
You know what's crazy too is like, you know, there's like a main sponsor and then there's, you know, sub sponsors.
It was only Bitcoin.
It was all Bitcoin.
Yeah.
Wild.
Oh man, people reaching. They were probably like, just get in the lead for a certain amount of time. And it doesn't even matter if you finish or even end up dead last. Just get in the lead.
Yeah. Yeah. It was
Dogecoin would be better.
Dogecoin would have been, that would have been crazy.
No, but I'm like looking at it and I'm like, man, I don't know. Like, it seems like the market's starting to come more in favor. Equities are starting to come more in favor. And like, honestly, it feels like the crazy spec stuff, I don't want to say it's slowing down, but it feels like the craziness has sort of tempered out a little bit. I don't know if a lot of people were shaken out of the market just because they got their ass handed to them or what happened, but it just feels like we're getting a little bit back to normalcy.
Yeah, I mean, this past week, the market really kind of bounced back and looked awesome. You know, we've talked about the corrections that we expected to have happened. And then last week, it was like everything kind of turned around, especially in the reopening and cyclical type plays. Tech did good too, don't get me wrong, but it did not outperform some of the reopening plays that we've been kind of talking about this whole time.
Yeah, for sure. Also, was AMC up 30% at one point on Friday and then end up negative on the day?
Yes, it went up and then actually went down 30%.
That's crazy.
Which is something that I wanted to ask you about and talk to you about a little bit, because there's this. We've talked about AMC and it's been a hot source subject, I guess, because we like on this show we like to make bull and bear cases for everything. And nobody wants to hear the bear case on AMC. And every time we give any kind of I guess the other side of the coin point of view, people lose their shit. But the fact of the matter is that the higher this goes, the more risk that's involved with this. And we kind of saw that on Friday when it went all the way up to $36 a share and then closed down below or right around $26 a share at the end of the day. That was pretty wild.
What are you going to ask me?
I was just going to ask you, are we going to see a little bit more of a resurgence of some of the meme stocks? Because GameStop was going off too. BlackBerry was going off. All the ones that we saw go crazy in January really started to pick up. And it seemed to be related to Wall Street bets, but I'm not so sure. And I think that some of this was also institutional trading that kind of sparked it. And then everybody got excited about it. Kind of want to get your take on that.
I mean, there is no better example of confirmation bias outside of crypto than meme stocks.
Yeah.
And I don't even think outside of crypto. I don't think there's a better example of confirmation bias than meme stocks. And people lose their shit and they want to tell you, I told you so. And you've been getting a lot of heat about it. I haven't really said too much about it, but you've been getting a lot of heat about the AMC in particular. Yeah. And it goes up 30% and you could just see confirmation at play, people flexing their muscles, puffing out their chest. That was a tough day. That is scarier than anything else. The fact that it went up 30% and in the same day went down, I would be nervous. And it seems like people are trying to squeeze whatever they can out of the life of it. But the reality was AMC was at levels it hadn't seen since 2015. Regardless of what you believe about the industry short-term or long-term, it just doesn't seem like it should be there. So it's a real scary situation that I don't want any part of. Yeah,
at this point, and I've said this for the last couple of weeks, I don't want to be long in it, and I don't want to be short in it. I just don't want. I'll just watch it continue to do whatever it's going to do. One thing that I will say that we haven't mentioned before is that there's a lot of chatter out there about how it's going to go the same way of a GameStop. It's going to go to $100 a share, $150 a share. That's what you're seeing all over Twitter, and I think. One thing to keep in mind is that maybe a lot of people don't realize is that, the movies have been coming back. Don't get me wrong. I do have these numbers pulled up. So this weekend so far, and this is just as of May 28th, so as of Friday, A Quiet Place, which was a big reveal, Quiet Place Part 2 came in number one at 48 million. I'm sure it's probably a lot more on Saturday, Sunday. But Cruella, Walt Disney's Cruella, also did really good at the box office. So these are some pretty good numbers, but these aren't numbers that are anywhere close to what we saw pre-pandemic. And what I will also say, too, is that we look at some of when I'm looking at something, especially from a short squeeze perspective, if there's a lot of short interest, what also has to be there for me, not always, but what always has to be there for me, too, but what sometimes has to be there to me, at least what I'm looking for, is going to be the share structure, the float. What's it look like? Yeah. GameStop was a very unique situation in that it was shorted over 140%. The float was 4 million, I want to say. No, I'm sorry. It was 40 million, and then they went ahead and diluted some of it. It was 40 million at the time. Right now, it's sitting at 70 million is the outstanding shares. You look at AMC, it's 10 times that, 450 million.
Crazy. That's crazy.
So what does that mean? It means it's going to take a lot more shares to buy up for this to move, right? Yeah. And the short interest isn't nearly that of a GameStop. So that anybody who thinks that this is going to have a GameStop-like situation, I think the chances of that happening are far less possible or probable than something like a GameStop. Can it continue to squeeze up? I'm sure it can. Nothing ruins fundamentals and a chart like a good old-fashioned short squeeze, but there are real risks here that are involved in getting into something that's moved all the way up here.
Yeah, it's I don't think people are listening because what we're saying is we're not saying if you're in it, you're green on it.
I'm
We're not
hoping
saying
that
you should,
if you're in it, that you took some sort of profit at least.
yeah, we're not saying you should necessarily sell it. I mean, I said if I was in it, I would take profits, but I wouldn't be all out on it. I'd want to see if it runs. I'd want to hold on to some shares and work on free shares. People aren't tending to, they're hearing what they want to hear. And I think people are doing a really poor job of giving the bull case of AMC. Like if you had to convince me to buy AMC, I really am not hearing a bull case. And if your argument is GameStop, that's a very loose argument. Like it's just, you're hoping the world comes together perfectly one time. Like even for GameStop, what happened isn't going to happen again.
No. Yeah.
And so that's going to be, that's a challenging thing is like meme stocks are here to stay. There'll be sort of retail communities that are going to be able to move stocks.
Yep.
But it's going to gamble to figure out which one it's going to be. And they're going to be people that will have success on it. And you could do that. Allocate a portion of your portfolio. But the fact of the matter is people who are truly trying to talk about AMC aren't really making a compelling case. Will it come back? Sure, it could come back. It's a reopening play. It should move well with reopening in theory. But from a long-term perspective, the argument holds little water. So this isn't to knock anybody, but I wouldn't want to get in anything that I can't make a bull and a bear case. And if all you're doing is getting your feelings hurt because Own the Chaos isn't jumping on it with you.
Yeah.
If anything, you should feel like, okay, what are they saying that's the bear case?
Yeah.
And what is that? How does that factor into like what my argument is? And then make your decision. Like,
yeah,
you don't have to go with what everybody says, but like if you're not seeking the bear case, you're going to get in trouble. Maybe not with AMC, but you're going to get in trouble down the road.
Yeah, I mean, and we do that with stuff that we like. There's plenty of stocks that we like that we're even in. Yeah. And we just understand the bear case, and I think it's really important to know that. Obviously, knowing both sides of this coin, knowing the bull and the bear case, and making a decision based off of that. That way, that if things don't go your way or they go south on you, you at least know what the potential reasons are as to why, so you can make a plan, an exit strategy to take a loss if you have to, so that you're not taking even further loss later on down the road.
I have to also tell this story about, I got a good story for you. I told you the beginning of it, but I didn't tell you the end. A conversation I had last night. So I went out last night with some buddies.
Yeah.
Ran into a buddy of mine who's hasn't been out in a while. He got married, is about to have a kid. So this was kind of like one of the nights he got out.
Yeah.
We were catching up, and he's like, so what's your stock pick? He only said that so because he wanted to tell me his stock picks. Yeah. Like I can tell when people only like they want to open it up so I can say,
yeah,
or so they can just be like, oh, well, I'm liking this. So I was like,
I love like when people do, cause so like I do the same thing, and then they always want to like get a stock tip from you. Yeah. It was like when I worked on cars, and all of a sudden it was like, oh, this part is something's wrong with my car. What is it? And it's like giving no context. So yeah, it's like the same thing.
So he asked me about it, and he made some money off of Rocket. I told him about Rocket. He made money off Rocket.
Yeah.
But his whole point was to talk about his stocks, and I really remember the ones that I really want to remember what they were, but they were just ridiculously spec, OTC stocks,
yeah,
whatever they were, and that's fine. There's a place for them. But every one of his stocks were like, this stock is going to go off. They were all speculative,
all gamble.
The least speculative stock he had was Skills, and that's speculative.
That was the least speculative.
Yeah, that's the least speculative.
Jesus.
And so he's like, what are you in or whatever? So I mentioned the one I like most right now is Airbnb.
Yeah.
Okay. Oh my God. Like, no way. Airbnb is going to be $90 in a couple of months. And I'm like, you may be right. It could be. I said, but long term, I feel good. Oh, that business is losing revenue. It's going down. And I'm like, is it? Like, I was just like, is it? Like, that's all I said. I'm not on a Saturday night having this conversation with you. But here's the crazy thing. So basically all I kept saying was, listen, I don't invest in speculative stuff. Like that could be great. I don't invest in speculative stuff.
Yeah.
I invest in growth stocks that have been around, that are on discount. That's it.
Yeah.
And so he goes, so it's like the majority of my stuff is that, very little is in spec. And so we're talking, and he's like just telling me how he literally said to me, like, I'm going to buy you a yacht or no, I'm going to buy you a vacation and rent you a yacht when all this stuff goes off. I'm like, I hope it goes off. Like, let's go, Skills. Let's go. But then he tells me this story. But my buddy, Captain Biceps Troy, Troy was like, yo, tell him about the crypto story. Tell him how you feel about crypto. He invested in Ripple, like 8 cents, something.
Yeah,
Ripple's almost at $1, if not at $1, right?
Yeah.
So he invested in 8 cents. He got a few $1,000s worth. When it went up to it made an initial move. It went up to like $3, I guess, at some point.
Yeah.
I think. Anyways, at some point he was up like 30, 40K.
Holy shit.
Goes to sell out.
Yeah.
Goes to his wallet. Can't find his key. Like, can't find the passcode.
Oh
or
my
whatever.
God.
Never got that money.
That's the one thing that scares me about crypto. Not crypto. Not that like you shouldn't invest in or anything like that, but like we talk about bear cases and risks. Like that's a big one.
Yeah. Now you might say he's an idiot. You might say, how do you lose that? How do you, whatever.
Yeah, yeah.
The reality is that it doesn't matter, because if you look at the opposite end of that, like if you're in stocks and you lose your password to TD Ameritrade, just click forgot password, call up customer service, do whatever you can do. But that just shows the power of like, it could just poof, be gone.
Yeah.
And even your passcode, how reliable is that? Like, these things aren't out of the realm of possibilities. For you to be out of $40,000, and I'm like, is it ever going to come back? Like, you think there's any way you wrote it somewhere? He's like, no, it's gone. It's gone. And I'm like, so are you ever going to invest in crypto? He's like, no, never again. And like,
I mean, that's not a reason not to do it again. Anyway,
it's not a reason not to do it, because you can go into like PayPal, have a third-party company hold a wallet for you. There's other ways, but it shows to somebody's trading style and like
the short-sightedness too.
Yeah,
yeah.
But it was crazy, man. You lost the key to it. Like,
that sucks,
bro. That was, in a way, I'm like, so you're telling me, like, I'm supposed to listen to you and you just can't find something? Like, you just threw away, 40K. So anyways, all you out there, if you open a wallet, make sure you keep the information somewhere nice, and then have a backup of it somewhere else.
Jesus. That's crazy. That's wild.
Yep.
All right.
So anyways, I thought people would enjoy that story.
Yeah, that is insane. So this month, tomorrow is the last day of May. We have June coming up, and I think this will be interesting to see how some of the stocks that we've been talking about do react.
Yeah.
I think when you look at some of the stuff that we've been talking about, and we'll get into some of the stocks that we're watching this week are kind of related in this field, but oil, energy, travel stocks. I think even things like Google and some of the other ones, even Facebook, could benefit from travel. But I think we're really starting to get into this really interesting time of the year, because it is peak travel season. We're coming off of a pandemic. Demand is twice, maybe even 3 times what we saw pre-pandemic. So I would be very interested to see how stocks react. I think that the month of June could be very interesting. It could get really fun if you're in the right stocks going into the summer months here.
Yeah, and that's what I was alluding to earlier. And if anybody's interested as far as stocks to maybe look at, if you guys like and subscribe to the channel, make sure you guys definitely hit the thumbs up. But if you subscribe to the channel, we did 3 videos this week. We did top stocks for June. We did growth stocks, top growth stocks for June, and top value stocks. So a nice mix of stocks that we'll continue to be doing. But check those out. Make sure you guys subscribe. And that's kind of what I feel like. It's been so crazy and so choppy as far as the market's concerned this year. It finally feels like things are leveling out. We haven't really heard much from the government. We haven't administration. We haven't heard too much on the infrastructure bill or whatever. I mean, it seems like we're returning to some sort of normalcy, and we can just like get to a point where things make a little bit more sense. And so I'm excited about it. I think this is going to be an important month, but I feel like, at least for me personally, I had some cash to use. I'm starting to put it to work, and I have a couple stocks this week, particularly that are on our top 5 that I want to use that money for.
Yeah. So, nevertheless, I think it's probably safe for you to say that you think as well that June's probably going to be a pretty good month if you're in the right stuff. And so I think it starts with the stocks that we're going to be watching this week. And what do you say we go ahead and kick that off?
Yeah, let's go.
All right. So the first stock that I am watching this week is going to be Goldman Sachs. Now, back in March, the Fed came out and did a stress test on the banks and basically said that they were putting temporary and additional restrictions on the banks that included company dividends, increasing them or what have you, and then also stock buybacks. So the banks in general were restricted from that, and those restrictions come off on June 30th. Yeah. So why are we talking about it this week? Well, we always talk about why that you should consider getting into stocks on potential catalysts well before and in advance of that catalyst. So you want to try to think about this kind of stuff earlier on so that you're not stuck chasing it or maybe even falling into that trap of buying the rumor and selling the news, and then you're the one that's left with a rotten egg. So I think that Goldman Sachs looking to accumulate it even more so. Now, I get it, guys. We could take a look at the chart here. It's gone up a ton. I still think that there's room for this to run, and the reason why I'm saying this is because of what I explained with the Fed, the restrictions coming off. I think that if they go ahead and issue more dividends, or especially the stock buybacks, I think it's going to be the bigger story here. This probably could end up making a huge breakout move, and this goes for all of the other banks. But I like Goldman Sachs; it's best in class. This could very well break out above 375 and continue to go higher. As crazy as that sounds, I know that this is, sacrilegious for those of you who buy low and sell high, but I think there's definitely a case here for Goldman Sachs that you could buy high and sell even higher.
Yeah, absolutely. And I'm currently in Bank of America specifically for the hopefully a run up in June into June 30th. I think this is very much buy the rumor, sell the news situation.
Yep.
Now, they had already partially instated some rules around you could offer some buyback, you could do some buybacks, you could offer dividends, but I think the bigger thing is to remove all restrictions is going to be huge for it. So I like that. That's a good stock for sure. Yep. Goldman Sachs is our best in class. Next one I have similar to one of yours last week. So you had AutoZone, I believe, last week.
Yeah, they had earnings and crushed it.
I have Advanced Auto Parts, which is has earnings Wednesday pre-market, June 2nd. Their estimates are $3.08 a share, which is monstrous. Like, this will be their biggest quarter if they can really beat what their expectations are. They've never had $3 per share on earnings per share.
Yeah.
I'm saying they beat 323. They actually missed, if I'm not mistaken, I believe they slightly missed last quarter. They did. My only issue is they slightly missed and then they raised guidance.
Yeah.
So I'm not saying this is a guarantee, but it has a nice little pullback. I'm getting in this, and I'm getting in this for the run-up as long as there's not a big pre-market move. So hopefully I can get this on Tuesday. I just don't know that the bar is being set too high. However, they've down 22% since last earnings. They're up 22% since last earnings, and that's what I'm worried about as far as that. But there's a little bit of a pullback, which you'll talk about on the technicals. Here's what I think, though. You have the same case for AutoZone. The thing about Advanced Auto Parts is that we're having a little bit of a logjam as far as new cars are concerned with the semiconductor issue.
Yeah.
So cars that are used cars are going to benefit. The used car market should be hot.
It is hot.
And Advanced Auto Parts is one that should continue to benefit off of a continued move, and it's only going to get hotter in the used car market. 2020 had record net sales of $10 billion. They had record sales in spite of the fact that they had a decline in miles driven. So record sales in cars aren't even on the road. So that was huge. And then just looking at what their earnings call suggested, they're really working on profitability, increasing the margins. Their fundamentals look set up to do really well. So this may be a good opportunity to play the run up. Not sure if I'm going to stay in it over earnings, though.
Yeah, man. I mean, I think that this is going to be, I agree. The used car markets aren't going anywhere, and they're only going to, miles driven is actually going to increase. And we've talked about how, domestic travel is going to be where it's at this summer, not just from an air travel perspective, but driving, road trips, all that good stuff. Cars are going to break down. They're going to need, maintenance parts, all that good stuff. This is, in my opinion, a good opportunity to get in on Advance Auto. Maybe obviously see how they fared during earnings, but when you look at Advance and the way that they had earnings and they absolutely annihilated it. It came in with $17 expectations and blew it out of the water with $26 actual earnings. And so I don't think that Advance is probably not going to miss those. You look at something like O'Reilly's, that's also in that same category. But yeah, a dip here, in my opinion, is probably going to be a really good one as well. I like this one a lot. All right, so for me, and I don't want to say oldie but a goodie, but we haven't had Penn National on the Stock Watch Sunday in quite some time, and for good reason, right? I mean, it's gotten beaten down big time. Went all the way up to $140 a share, and then gotten beaten down all the way down to $75 a share. But that's where it stopped. And I had mentioned about 3-4 weeks ago, getting down to this level, this 50% retracement will be crucial as far as the chart was concerned. I thought that if it could retrace that 50% and hold, that we were going to be in good shape. Yeah. Right now, over the last couple of weeks, that's held pretty true. It's starting to turn around on the chart. I really like that. What I also really like is that Maryland legalized sports betting officially. So Penn's going to be moving into here. The Barstool Bets is going to be moving into Maryland as well. They bought Hollywood Casino here in Maryland, and that's going to be that was just approved this past week as well. Mm-hmm. They ended up moving into Indiana. 8 more states is going to be legalizing sports betting before football season starts, and then 2 more after that. So at least, that's the ones that we know. So I think that this is still very much going to be a play. Looking at the chart, this is a really good time, I think, in my opinion, to get in. And there's a couple of reasons for this. And I know that we've talked about Penn a lot, but I think that this is a really good time because there's not a lot of people focusing on something like a Penn or an MGM, because sports right now, you got baseball. Hockey season, playoff hockey is awesome, and people are crazy about playoff hockey. You have the NBA playoffs, yes, but it's not as big still as football. When that gets started up, even college sports, it's going to be monstrous. I think we're going to see a ridiculous amount of sports betting coming into play, and you're already seeing companies like MGM and DraftKings trying to gear up for this. So, and Penn's in that same boat. With the retrace here, I think that this is going to be something interesting to see if we can get this up over that 200-day moving average. I'm really looking forward to that, right around $86 a share. If we can do that, I'm going to get really excited for Penn, and I think that we're going to see a really nice run up into August and September when football comes back around.
Yeah, there's no shortage of bullish catalysts on Penn. Their performance in Michigan is certainly a bearish case indicator for it.
Yeah.
But overall, I think that was a wake-up call that's going to be for Penn, and I think that's good it happened early. And so, yeah, I agree. I'm in it, half position. I plan to add to it. It's performed really well for me historically, and I expect it to do more of the same.
Yeah.
Next stock, I have ChargePoint. So ChargePoint has earnings Thursday after hours, June 3rd. They're coming in at a loss of 11 cents. And I have them slightly beating a loss of 8 cents. But this is really a crapshoot because I don't know what it's going to come at, considering that last quarter they missed horrifically. Estimates were a loss of $1.08, right? So now they're expecting a loss of 11 cents. They missed a loss of $1.08. That was the estimate. They came in at a loss of $1.72.
Yeah.
So if they beat, there's a chance there could be profitability there. If they do that, what we know about stocks, especially newly public stocks like ChargePoint, if they go positive, that's going to set the thing off.
That's a huge catalyst, yes.
I just don't see it happening. I'm going to be honest. I want it to happen. I don't see it happening, but it doesn't change my sentiments towards the stock. I still feel really good about ChargePoint long term. They're the market leader. They're the largest EV charging station in the U.S., has like over 135,000 charging points. They have huge opportunity for exposure in Europe, which is an underserved market as far as when you consider EVs. They're probably going to lead the way more so than the U.S. I don't know if that's like a ridiculous thing for me to say, but like it seems like the EU in general is on board with like focusing on EVs as well. So we'll see what happens. But the other thing is, let's not forget the Biden infrastructure bill. And the Biden infrastructure bill squarely supports ChargePoint. So things like Blink, companies like Blink and ChargePoint should perform very well as long as this thing goes through in some semblance of what it looks like now. Last thing I want to tell you about is revenue. So 2019 revenue for ChargePoint was $144.5 million. It only went up 1.4% in 2020, which obviously COVID, but it only went up to 146.5. So it only went up 2 million.
Yeah.
Projection for 2021 are 200 million. So it's projected to go up 36%.
Yeah, that's pretty big.
Let's say it gets to 40% and continues that path to profitability. Those are formulas for success. So I don't know how much it matters that it necessarily beats, because I think everybody is kind of like holding their breath. Like, is it going to actually come in near that lost 11 cents? More importantly, what's the guidance? What's the revenue? But this sucker is one that I'm going to keep my eye on moving forward, even after earnings.
Yeah, and I just ended up drawing this trend line here, and we could see that it's actually trying to break out above that that downward trend over the last couple of days. Now, it is retested. It hasn't quite yet, I would say, confirmed breakout over that 200-day moving average. But, man, it's certainly changing directions on the chart. And if they can come in with some good earnings, that is going to be just the catalyst that they need to continue to really kind of reinforce this reversal. I like the setup here. The risk reward is actually pretty good. When you look at the bottom support at $20 and it's sitting at $24 a share, I think that you could very easily, with some of the catalysts that you pointed out, get this up over that mark. And I think that it's a really good setup. I like this one a lot. If you're looking for an opportunity, where would be a good opportunity to buy at? If there's like a pullback around 22 to that $20 mark, like I'd mentioned, those could be areas. But honestly, the way that this is turning around, if it were me, I would be looking for an area to just buy it and then look for dips along the way. I would want to just own some shares if I really saw the value here, which it looks really compelling here, in my opinion.
I think I'm going to buy both those stocks.
Blink and ChargePoint?
No, ChargePoint and Advanced Auto Parts.
Oh, okay.
My two stocks. Normally, I don't always get them. I'm just watching them.
Right.
I feel really confident that I'm at least going to buy one of the two, but I'm most likely going to buy both.
Yeah.
So for those in the Chaos Crew, I'll let you guys know about it. And so, yeah.
Yeah, so, I mean, this is going to be great. I'm on the other side of this coin as far as ChargePoint's concerned. Fat Man Zoom's talking about renewable energy and saving the planet and all that stuff, and I'm talking about good old oil. My next stock is going to be Marathon Oil, and I don't know if this is actually something that I brought to the table on Stockwatch Sunday, but it was something that I brought to the table for our Chaos Crew members in our daily watch list, which, if you guys wanted to be a part of, make sure you're hitting the join button next to subscribe. I put out, Fat Man Zoom and I put out a watch list every single day. We also have, you can get access to our Discord group, my portfolio, the trades that we make as we make them. They're all in there within our community. If you hit the join button next to subscribe, we would love to have you guys there. It's $4.99 a month. Doesn't seem like a lot to you, but it means everything to us. It helps us support the studio that you see behind us and everything else in the channel. So we certainly would appreciate it. If you hit join next to subscribe. And Marathon Oil, Fat Man Zoom, is priced at $12.11. Now, oil right now is around $65-ish per barrel. I'd have to go back and double check that. But there's projections that this is going to 85, and that's levels that we haven't seen since around 2007, 2008. It's pretty amazing to see just how fast it's gone up. But again, we're going back to the travel stocks. Demand in general is going to go up. Yeah, $66.50 was oil at the close. And I think that Marathon has a lot of room to run here. We look at the way that the oil's been moving, and Marathon, I wouldn't say is lagging, but it's lagging the rest of the industry as far as the Exxons and Chevrons of the world. And it's actually looking like a pretty bullish setup. So we look at the chart here too. We could very well see a breakout. There's a really nice uptrend here. This has been consolidating. And we break this back out, or we zoom out, and you could see how this is kind of forming a little bit of a bull flag here on the daily chart. We have lots of upside here to still move. Even pre-pandemic levels was at on January 6th was at 1398. So with it closing at 1211, there's still lots of upside. And like I said, the price of oil is much higher than it was pre-pandemic. So this is lagging a little bit. So I think that there's lots of room to run for Marathon Oil, especially as we get into these summer months. I imagine that we're going to see the price per gallon go up substantially in June, July, August.
Yeah, absolutely. And I think this is a great diversification play for people. I kind of throw it in the bucket of, this might sound crazy, but like things like an AMC where like they should do well short term, but like from a long-term perspective, oil scares me a little bit.
Yeah.
But if I am in oil, I want to be in ones that are focusing on renewable. And and really shifting their model. But I think they should do well this year for sure.
Yeah, and I think that's the dynamic between you and I, right? Like, a lot of these I'm focusing on making short-term, swing trades, whereas you're looking at the big picture, the longer term. And I agree. Like, I'm not planning on holding marathon for the next decade, but I think that over the next 6 months, it's probably going to do really well. So, bringing it to the table in June, what I think the setup, the consolidation that we're seeing on the chart, is going to be really good for it going into these summer months.
Yeah, technically it looks good. And I mean, we have oil in our dividend portfolio. So it's good. Nice. How many people we got in the house?
We got 155 of you guys hanging out. So again, thanks for allowing us to be a part of your Sunday evening. The stock market is closed tomorrow for Memorial Day, so we just wanted to take a second to recognize those who gave their lives for Memorial in remembrance of Memorial Day. So so that's why the market is closed. But we are here with you on Sunday. We appreciate you guys being here.
So those are our top 5 stocks, guys. Again, if you guys want a daily watch list where we got our 5 free stocks just like that one, even though I can't speak English, go to ownthechaos.com. The link is in the description, and we send those out every day. Do you have a cheesecloth condom? I'm putting you on the spot.
I do, but I was going to get to the stock under $10 first.
Okay. Well, top stock under $10, flipping it around.
So, that was my fault. But I actually have car lots.
Oh, okay.
Car lots is I don't understand the reason why this is down as much as it is. Yes, there's been some negative catalysts, but not to the point to where this makes any kind of sense.
Yeah.
We've talked. So one of their partners that they had a contracts with ended up yanking some of their business, but I don't think this slows down car lots at all. We look at the chart. I think for the most part, I would venture to say that one of the bigger reasons this has gotten beaten down has been because of the SPAC stigma. This was a SPAC stock, and it just got beat down with the rest of them. Now, again, there were some negative catalysts that didn't help this thing out at all. But the fact of the matter is that I think this is extremely undervalued at $4.38, which is where it closed at on Friday. Now, I think that as far as risk is concerned, it's still there. Obviously, this is technically a penny stock at this point, but I imagine the upside here is going to be quite significant, especially like we were talking about with demand with used cars. This is the industry that car lots is involved in. So I think that this is something that could be temporary. And if you're looking to take on some risk while also seeking some high reward here, I think this is a really good setup for lots. I would probably wait to see where the selling actually stops, because right now we're looking at the bottom essentially. We haven't quite seen the floor. So I think there's definitely risk here, but the reward seems to be pretty great as far as I'm concerned.
Well, let me ask you this question. What's the $7.36? What is that?
It was a support that I had, and then it just broke right through that. So
it's sitting at $4. That's insane.
Yeah.
Wow, that's scary. Stuart Castro was talking about it. A couple people in the chat were talking about that. Yeah.
It just doesn't make any sense. I get that, there were some negative catalysts going for this thing, and they had some partnerships pull back, but I don't get it.
That looks like a Fat Man Zoom snack.
Yeah, I was gonna say you're free to take it, but yeah, I don't understand.
I didn't realize it went down to $4. That's wild.
Me either.
So are you going to get into it? You thinking about getting into it?
I'm seriously thinking about getting into it this week. Yeah.
Okay. Cool. Yeah. Matt Dix said he's scooping up lots. We got a couple of people already in it, so awesome stuff. Cheesecloth condom stock of the week. What do you got?
Speaking of cheesecloth condom, I saw D's Nuts in the house. Shout out to D's Nuts. Haven't seen him in a while, so shout out. The cheesecloth condom, I had to pick one of the meme stocks. No, it wasn't AMC, because I feel like we've picked on it enough. It was GameStop, actually.
Oh, damn.
I don't know what's going on here. I mean, it's already started to pull back at a significant sell-off on Friday, but the music's going to stop at some point, folks. If you're not in GameStop, in my opinion, I think the reliability here for you to make money is probably quite low, given how much it's moved up. Don't be surprised, and this kind of goes for some of the other meme stocks that have moved up, and we've already seen this happen with some of them. AMC did it, and then it suffered for a little while. But offerings could be a very real possibility. A lot of these stocks that have gotten beaten down over the pandemic that weren't great companies to begin with, were in mounds of debt. And so don't be surprised if you see an AMC or a GameStop come out with another offering with this recent run up. They got bills to pay. Yeah. And if you're going to pay them for them, then they're going to take advantage of it. So GameStop, in my opinion, can it continue to go up? Sure. But the higher this goes, the riskier it gets. And so this is why it made the Cheese Call Condom of the Week.
Nice. One stock I wanted to get you to check out that we didn't really talk about was STIC, BarkBox.
Yeah.
It had a nice little run for me. It was in my long-term account, and I didn't even realize it had a nice run on Friday, I believe it had a...
Yeah, you know what else has been moving, too, that you have been a huge fan of is Affirm's finally going in the right direction. But I like BarkBox. I don't know what the... I don't know if there's a catalyst that came out. North Star stockholders approved the merger, I guess, because they're just moving forward with... Yeah,
it's getting close to the actual merger.
Yeah.
And so just the vote happening and it going through and going public. I guess that might be what it is.
Yeah, maybe. This will be interesting to see how this goes. But I wouldn't be surprised if we saw a pullback on BarkBox. But we've talked about like this company being really undervalued. If this comes in still at these prices, I mean the business model, obviously the industry is monstrous. I mean this could be a really good setup for sure.
Yeah, it could be good. I'm excited. It's a good performer. I was telling you offline, I'm feeling a lot better about my portfolio. Still have a couple tweaks, but overall, in my position's almost green. Looking to continue to make that run, and it's almost green in spite of like huge upside opportunities in that portfolio. So excited about that, and I was excited about STIC as well. And I know I asked you about Alcoa a while ago or last week.
Yeah.
I didn't add to it, but I kept it, and now Alcoa is green.
Yeah.
So that's nice. Would have been nice to add to it, but no big deal. The other last question in stock I want to check out, Matt Dix actually brought it up too. So Zoom has earnings on Tuesday, and I wanted to bring it up, but everybody knows I love Zoom.
Yeah.
So I just wanted you to pull up Zoom, tell me what your thoughts were on Zoom.
I think everybody was shocked that we didn't bring up Zoom this week.
Yeah.
But I think I did that intentionally.
I did it intentionally.
Because, first of all, it gives us an opportunity to talk about it later in the week. But I think anybody who's been watching this channel knows how we feel about it. The fact that this has been moving up, though, over the last couple of weeks, I think, and I was theorizing with, I can't remember if I said this on the air, I know I mentioned it to you, but just the surprise that I think a lot of people are going to be in, that Zoom has not slowed down because the pandemic is coming to an end. Yeah. And I think that'll be reflected into this week's earnings. I don't even know what the earnings are, and I don't even know if I care, but I think that they're still going to have an amazing outlook, and I would be very surprised if they underperformed whatsoever or didn't, or slowed down because the pandemic is slowing down.
The crazy thing about Zoom is that they've never missed earnings.
Yeah.
They've never missed on earnings. Isn't that crazy?
Yeah, that is crazy.
They're expecting 99 cents a share, which is their highest estimate they've ever given as far as estimate. Last quarter, hold on. Let me say this right. Every quarter has outperformed the previous quarter. Every single one.
Yeah.
And last quarter, their estimates were 79 cents a share. They came in at $1.22. Their profitability is phenomenal. Guys, they are going to start spending their cash.
Yes.
And they're going to start making acquisitions. They're going to start increasing their footprint. Whatever direction that goes in, they've already done that. They haven't really seen the fruits of their labor as far as the hardware is concerned, which they should see that as a good catalyst this year.
Yeah.
And so I'm interested in how this goes. Man, this is going to be a really good earnings. I'm already in it. I'm slightly red because I've been in it for a minute. I've been surprised at the move it's been making, but I'm optimistic on it. We'll talk about it on Tuesday. We'll do an earnings watch party, but it'll be interesting to see. I'm not saying I'm guaranteeing this thing comes up because I think expectations are still going to be kind of high.
Yeah.
But long term, bullish as ever on this stock.
I'm definitely bullish too. There are arguments though. We always talk about the bear side, right? There are arguments that Zoom is overvalued still. And I would agree with that to a certain extent from a fundamental standpoint. They're trading somewhere around 7 or 8 times sales, which is still a lot. And so there's definitely that side of things that it's still technically overvalued. But the other side of that argument a lot of people make is like, well, can they grow into that? Yeah. And I think that Zoom can absolutely grow into that. We've talked about how they've given away a lot of their services and are about to cash in on a lot of that too. So there's that catalyst along with everything else that we like about Zoom. So, if there's opportunities here, if the reaction to earnings aren't great, I think that $300 seems to be a relatively decent support. So maybe watch that area. If it comes in and there's a really great reaction, watch for move over 350. We could see a nice breakout on Zoom.
I think where we're finally at as far as the overall market's concerned, and Zoom in particular, because Zoom, all stay-at-home stocks were getting beaten down as reopening was doing well. Right. I think we're now getting to a place where tech, stay-at-home, that's gone. Like, we're not worrying about that. So Zoom was getting in trouble because Zoom was like the poster child for stay-at-home remote plays. So anytime reopening did well, Zoom went down worse than anything else.
Yeah.
And so a stock like Zoom, I think now that it's showing really good patterns where even if the overall market's doing well, reopening's doing well, it also is doing well. So that's really what I got my eye on. And I have a feeling that we're kind of past this remote plays. We're only going to do well last year and they're going to get beat down. I think people are realizing they're going to still do well. Peloton's in a similar boat. I think Zoom and Peloton were the two poster children for that. And we saw Peloton come back.
We've made the argument countless times, and this is deep into the pandemic. We thought strongly that remote work wasn't going anywhere. Now, I'll at least say for myself that I could see remote work barely even moving. And I think what's actually going to be happening and what we're actually seeing happening is more of a hybrid approach where there is going to be room at the office for some folks, and I think there'll be some downsizing of commercial property, which we're already seeing. But then there's also going to be folks that will still remain at home. So I think there's going to be this hybrid approach of just being able to go in the office when you need to, but working from home when you want to. And for that reason, some of these stay-at-home stocks that have gotten beaten down could make a really nice comeback.
Yeah, for sure. Whew, that's it.
Whew. Another Sunday in the books, folks. Guys, thanks so much for hanging out. We're going to call it a night. If you could hit the like button on your way out the door, though, we certainly would appreciate it. And also consider being a part of the Chaos Crew. I see we got one member as we were live here. So if you guys want to be a part of that, again, hit that join button next to subscribe and get alerts from our trades, access to my portfolio, into the Discord group, also getting those daily watch lists from us. We put out 5 stocks a day as the market's moving, what we think might actually be worth taking a look at every single day of the week. So if you guys want to be a part of that, make sure you're hitting the join button next to subscribe. We'd love to have you guys as a part of the crew. It's going to do it for me, Fat Man Zoom. Anything
we got a lot of good earnings this week, so make sure you guys tune into our live streams. There was a couple we didn't even talk about, so I'm excited for this week. It may not seem like it's big names, but I think there's going to be some big earnings.
Watch out for that Adobe. DocuSign. See you guys.
Lululemon.
I quit this bitch.